Hi there, this is Adnan. Welcome back to my channel Training Express. Today is session number 3. But before we start session number 3, let's have a look at the answer to question of session number 2. Question was ABC Corporation has got assets of $50,000 and equity of $30,000. How much liabilities this company is carrying? We can easily find the answer by using the basic balance sheet equation. If you remember, the basic balance sheet equation comprises of assets equal liabilities plus equity. So if we rearrange these components, we can easily find out the answer. So we have assets of $50,000, we have equity of $30,000, and the difference is basically liabilities. So the answer will be $20,000. Okay, so today is session number 3 and we are going to look at different forms of business. We are going to talk about sole proprietorship, partnership, and corporation. So let's have a look at different features of these forms of businesses. First form of business is sole proprietorship. Sole proprietorship means that one person is running the business. So now let's have a look at different features of sole proprietorship. As far as the initial setup is concerned, it is quite easy to start this kind of business as there are no complex legal requirements. When it comes to power, as there is only one owner, so he or she can use the powers at his or her discretion. When it comes to capital, typically capital should be small because most of the times money is coming from the personal saving or borrowing from the family members. One of the important features which we need to understand about sole proprietorship is that liability in the case of sole proprietorship is unlimited. It simply means that the personal assets of the owner are liable for business obligations. Continuity of this kind of business might be affected by the health or other changes in the personal circumstances of the owner. Transfer of ownership is comparatively easy. We can easily transfer the ownership from one family member to another family member. Second form of business is partnership. Partnership means when two or more business people are working together to achieve some common goals, and normally it is to make profit. Now let's have a look at different features of partnership. As far as the initial setup is concerned, more legal procedural steps are involved to form a partnership. When it comes to power is shared amongst the partners based upon their partnership agreement. Capital, it should be larger than sole proprietorship as more business persons are involved. Liability is limited in case of limited liability partnerships. Continuity, partnership agreement contains all provisions about dissolution of partnership. Transfer of ownership, procedures for transfer of ownership are contained in the partnership deed. Third form of business is corporation. Corporation is a separate legal entity apart from its owners. And this is basically the distinguishing feature from sole proprietorship and partnership. Now let's have a look at different features of corporation. Initial setup, more legal procedures are involved like name searching, articles of incorporation, and other compliance requirements. When it comes to power, shareholders are the owners of the business. They elect board of directors who in return hire managers to run the business. Capital, Public corporations have large number of shareholders, resulting in large amount of capital. Liability of the shareholder is limited to the face value of the shares held. Continuity: corporation is a separate legal entity, so change of ownership does not affect continuity. Transfer of ownership: easy, as shares can easily be purchased and sold in an open market. Now we are going to look at the summary of these three forms of business. First of all, sole proprietorship. Initial setup: simple to start. Power lies with the sole owner. Capital is small. Liability is unlimited. Continuity is dependent on the owner, and transfer of ownership is very easy. Second form of business is partnership. Initial setup: little complex than sole proprietorship. Power is shared. Capital is larger than sole proprietorship. Liability is limited in case of limited liability partnership. Continuity is dependent on the partnership agreement, and transfer of ownership is procedural. Third form of business is corporation. Initial setup: more complex. Power: shareholders elect board of directors, and board of directors hire managers to run the business. Capital is largest. Liability is limited. Continuity: as the company is separate legal entity, so continuity is not affected as such. Transfer of ownership is very easy. Now we will look at types of business by activity. First one is service business. Service business earn revenue by providing services. Examples are accountants, lawyers, consultants, or advisors. Second type of business is merchandising business. Merchandising business earn revenue by buying and selling goods. Examples are Walmart, Costco, No Frills. Third type of business is manufacturing business. Manufacturing business start with raw material, and after going through different processes, they produce the finished product. Examples are Honda, General Motors, and Toyota. At the end of this session, let me ask you a question. Which category of business would restaurants fall under? Service business, merchandising business, manufacturing business, or combination of 1 and 3? For the answer, please check out my next session, session number 4. This is the end of session number 3. So let's have a look at what we learned today. Today we learned that there are 3 basic forms of businesses, and they are sole proprietorship, partnership, and corporation. I hope you liked today's session. Please stay tuned for more accounting lectures, and don't forget to subscribe to my channel. Thanks for watching.